Preston, it's an honor to have you on my show. I hope you're fine today.
I'm doing great. Great to be here, Mark.
Thank you for appearing. The first question, of course, is in summer this year, you nailed it actually, because you predicted a new all-time high with Bitcoin in the Bitcoin price before Christmas. So how did you come to this conclusion, and what does your crystal ball say for 2021?
It's all luck. No, I mean, no, it wasn't anything that was a difficult calculation. All I was doing was looking at the previous 4-year cycle. I was looking at how much in percent terms the price goes up from the previous halving. And I kind of suspected we were going to see something very similar. So when you did that simple math, you came to, and when you look at the stock to flow model, that's more of like where the price is maybe going at a terminal phase for the next 4-year cycle. But as far as the timing goes of like where the price is going to be at any point past the 4-year halving mark, I just used a percent change from the previous 4-year cycle and kind of used that, and lo and behold, it was accurate. That doesn't mean that I was right, but we'll see how things keep on progressing. So it was kind of a neat thing that played out.
Congratulations, of course. Yeah, you're already a legend now. So I follow you for quite some time on Twitter, and I recommend everybody in the audience to do it the same. I will definitely post your Twitter handle in the show notes, as well as your podcast. Your podcast is definitely a must listen to. It's really, really educating, and I also will copy the link in the show notes. So, but it's the first appearance, it's a premiere, so to say, on a German channel. I'm very honored, and I'm happy that you had the time for me. So the most people in Germany, unfortunately, don't know you yet. So perhaps you may introduce yourself a little bit.
I always really liked math, and I have an engineering background. So for me, the finance and investing stuff was kind of a natural fit, especially because I got my start kind of studying Warren Buffett. And anyone who studies Buffett or knows how he's kind of doing his valuations, it's just a discount cash flow model, and you're using a little bit of math to determine what you think the value of a business is. And so this was a natural fit for me, and I just dug in and really kind of developed this fascination with finance and investing, and started a podcast, started interviewing, like yourself, interviewing some folks that are just world-renowned investors, and just learned myself along the way that there's a lot of different ways to kind of go about investing beyond just a discount cash flow model like the forte of Warren Buffett. I'm pretty sure Buffett does a lot of other things other than just discount cash flow models. So I don't want to scope it down to just that for him. But yeah, I mean, it's been a fascination. I've been doing it for probably a decade now, and as far as creating media around it, and yeah, that's how I got my start.
Okay, cool. So you started as a classical only stock investor like Warren Buffett, but you changed a lot in the last couple of years. So what was the trigger, and how did you get into macroeconomics, of course, and how did you learn about the importance of economic cycles?
So after the 2008 crash, I saw how central banks were responding to the crisis. And I kept telling myself, there's no way this fixes the inherent systematic problem that caused 2008.
Yeah.
And I knew another big event was going to happen. I didn't know what it was, yeah, or have any idea what was going to trigger it or what it was going to look like. And I would argue we still haven't seen anything yet. I think that's about to play out in a major way, but because of that suspicion that I had, and that feeling, that gut feeling that there's something systematically wrong with the global economy, I kept digging, and lo and behold, I came across a few people that I think helped me unravel what was going on a whole lot better. One of the main ones is Ray Dalio,
okay,
who I'm sure most people are familiar with.
Yeah.
His economic model of the economic machine, how it works, the large credit cycles, smaller credit cycles, those things had a drastic impact on how I look at investing, how I just understand how markets move, and my understanding of how currency specifically can be, and I'm going to use the word manipulated, but adjusted by central banks in such a drastic way that that you might have a great P&L on an individual company, but if you got central bankers that are flooding the system with more units, it's going to make the value of everything go up in those nominal terms. And I think that was something that I came to grips with more recently over the last 5 years that I definitely didn't have 10 years ago. And it's just changed the way I invest completely.
Okay. And considering everything going on right now in the world, where do we stay on the cycle? What do you think?
I think what's happening right now is you're at this end game scenario where interest rates are now pegged at 0%, and the central banks just don't have the capacity to keep the charade going anymore, to keep manipulating it in the manner that they were able to in the past. So let me give you an example. Back in 2008, interest rates were at 5.5%. They were able to drop interest rates, to step in at the federal funds rate, drop the federal funds rate, manipulate the market, get it going again, all those kind of things. But now we literally have globally, all the central banks around the world are pegged at 0. So they're running out of options to make it seem or appear natural. And so that's why we're seeing the quantitative easing is totally blowing and destroying the middle class, not just in the United States, but literally all over the globe. You're seeing every single country in the world talking about UBI because they have to get more liquidity into the system. So they're now at an end game. It's not just in one country, it's global. I would argue the reason that you're seeing it on a global scale, all coordinated and happening together, is because everyone was on the same monetary standard going back to Bretton Woods. We all came off collectively as a world. We came off that global currency standard in 1971. And we've all collectively had interest rates bid, which makes the yields drop. And now here we are at the end game. So I think when you look at that and you kind of see that model, it's kind of obvious to see that there's some major issues with currencies playing out right now. And I suspect that that's only going to get more exaggerated going into 2021.
Wow. Yeah, I always say, and I talked to William White yesterday, perhaps you know him. He was at the Bank of Canada, Bank of England, and at the Bank of International Settlement. He's a really great economist and dear friend. And we just came to the conclusion, actually, Weimar is everywhere right now because all the central banks have the same program. It didn't work in the past, but hey, if it doesn't work, just we keep on printing and we put just more medicine into the patient, even if it doesn't work. So, but we see the effectiveness it gets lower and lower. They pump more money in the system, they lower the interest rates, but the effect, the healing effect, is not getting anywhere. So I think we're at a dead end actually with the central bank policy. So living through the end of a long-term credit cycle, which is actually happening right now. This is a once in a lifetime opportunity or experience. What do you think? How might it play out?
Well, I think your example of Weimar 1920s is actually my base case of what's going to play out, but on a global scale. And people who might hear that might say, "Oh, this guy's off his rocker. That sounds crazy, right?" But when I look at the situation that we're in, and Germany obviously was in a very different situation back in the 20s because it was pretty much Germany versus everybody else, and they were caught in a situation based on how World War I concluded. They were in a situation that there was no way they were ever going to be able to pay back their war reparations. Yeah. So what's fascinating is that same scenario that was playing out for Germany back in the 1920s is now playing out for the entire globe right now, based on this really unique situation where we had global coordinated monetary policy for 80 years. And so I think because we're in a situation where every country has an incentive to devalue their currency, because what it does is it drops the price of their goods and services. It sucks other competing currencies into their country, and they benefit from that. They're engineering, and what's happening is you're in a situation where it's a tragedy of the commons, but it's a tragedy of the commons amongst monetary policy between nation states. And so how does something like that end? And so when I run the game theory on how something like that ends, it ends in total disaster unless something can come along and stand up as a new currency. Now, there's talk. I know Jim Rickards is a person who brings up this idea of potentially the SDR stepping in, becoming a new currency. My concern with that idea, and I have great respect for Jim, we're personal friends. My concern with that idea is it requires coordination amongst all parties, amongst all nations, to come to the table and say, hey, I'm going to trust you. Let's start this over again, right? And not only does it require the trust of them to start it all over again and to trust each other, but it also requires them to drastically, in a 180, change their spending habits fiscally, right? And I just don't see that playing out. I think that when I run the game theory on that, I'm saying that's never going to happen. Like the odds of that are 1% or less. So that leads me to, all right, so if all the nation states aren't going to be able to come together and come to an agreement on this new currency or this new policy for what money is, what about something that would be completely decentralized, or something that they don't necessarily have a choice in the matter, like technology stepping in and providing this peg? And in my opinion, that's my base case scenario of what's going to play out is we're going to see Bitcoin step in and provide the new money, the new currency, and the new standard globally. And it's going to be similar to how nation states are devaluing their currency now. They're going to get into a competitive situation where they're trying to acquire as much of this as possible. And I'm talking about Bitcoin, because they're going to see, again, it's another tragedy of the commons. The longer you wait to not own this, the more harm you're just doing to yourself as a nation state.
Yeah, that's very interesting. We'll talk about Bitcoin, of course, later in the interview, but perhaps already the central banks or the government started buying Bitcoin. Who knows? Yeah, I think Bulgaria and perhaps Kazakhstan, they already own some of Bitcoin. So yeah, that's interesting. So you expect hyperinflation, actually, because Weimar was the typical case, the ideal of a hyperinflation. So what do you think, how would a hyperinflation play out today in our world?
So when you say hyperinflation, I think it's really important to characterize what you're saying is going to be hyperinflating against. So when I say hyperinflation, I'm comparing fiat currencies to Bitcoin. And I would argue we've already seen this hyperinflation play out for 10 years now. I mean, I've owned Bitcoin since 2015, and I've watched the value of it go up well over 10,000% in my own portfolio for the position that I've had. And I will calmly call that hyperinflation. So, if you're saying it's going to hyperinflate, the fiat money is going to hyperinflate versus the price of oil, maybe not. But I can tell you, if you're valuing your oil with Bitcoin, it's hyperinflating. So I think that's really important, because I think when you get around a lot of people in traditional finance, they'll say, well, we have nothing close to hyperinflation. And in fact, we have deflation, right?
Yeah. And
what I would tell you is, having had a lot of these conversations for the last decade, the one thing that I can tell you that I think is most misunderstood is the definition of inflation and deflation. And Jeff Booth is a guy who wrote a phenomenal book. It's called The Price of Tomorrow. He talks a little bit about this idea. But in general, I would tell you that inflationary monetary policy, which is we keep debasing the currency, is causing price deflation. If you're talking the same currency unit that is causing the monetary inflation, right? And if you don't get the terminology right on some of these things, these ideas of inflation, deflation, what you're referencing it to, it's going to be really hard to understand how things are going to play out moving forward. So going to the essence of your question, when I think about Bitcoin taking over and becoming the new unit of account for people to want to settle in, the value of things are going to be a little difficult to understand. So like when I think about a house, the value of, let's just say you have a $300,000 house, and you think, well, what's going to happen to the value of that house in 5 years from now if this scenario that I'm describing with Bitcoin taking over is a real scenario? Well, I would tell you that the value of that house in Bitcoin terms, you know, it's only going to get cheaper if you're paying with Bitcoins to buy that house, and it's going to get cheaper and cheaper in a drastic way. The other thing that's going to be probably the biggest piece of all of this is all the debt that's denominated in the world right now is denominated in fiat.
Yeah.
So we've got, let's just call it $100 trillion as the number. It's all denominated in fiat. So if everyone has a mad rush, just like we saw in Germany in the 1920s, a mad rush to get out of the paper mark and get into some other alternate currency, call it the dollar or whatever. The dollar was, gold, the dollar, those were very popular currencies to have as your unit of account if you're going back to early 1920s Germany.
Yeah.
And I think what you're going to find here in the coming year, in the coming year to 5 years, you're going to see a big push for companies to start moving towards Bitcoin as their settlement layer. And when you see that happen, you know, so back to the house example that I'm trying to explain here. So if you were highly levered in the ownership of that house, let's say you borrowed 80% and you only put 20% down, you continue to have a job, you start transitioning to a unit of account of, call it Bitcoin. It's going to be in the value of that keeps going up. It's easier and easier for you to settle that
Sure.
debt that you have, that debt burden that you have that's denominated in fiat, because you're not going back to the negotiation table on a loan that you took to say, hey, I don't want it denominated in fiat anymore. I want it denominated in Bitcoin, which is hyperinflating against fiat. That's never going to happen. So I think you're going to have an interesting dynamic kind of play out there. I see anybody who's owning a lot of bonds that they're going to be completely impaired, probably in short order, probably in the next 5 years, they're going to be almost completely impaired in reference to Bitcoin.
Yes.
And that's the really important point, because if you continue to use fiat as your unit of account, none of this is going to, you're not going to see the hyperinflation whatsoever. But I think once people start making that jump and they start seeing how powerful the technology is, and they see more and more billionaires and companies, and soon you're going to start to see tech companies that are putting this on their balance sheet. And then at that point, I think it starts becoming a self-fulfilling prophecy.
Yeah. Yeah, the thing is, the most people don't understand what's happening right now, because they think, okay, my dollar bill is still there, but they don't see that their purchasing power getting less and less. And imagine Bitcoin went up 200% this year, yeah, or gold went up 30%. That means I have to pay more and more paper bills for 1 ounce of gold or for 1 Bitcoin. That's it. They're stealing your purchasing power. And that's what I try to educate the people. They need a safe haven for their purchasing power. And the perfect store of value, that's what I wrote in my last book as well, is, in my opinion, it's Bitcoin, because it's the only asset which is really limited with math. It's the foundation is math, where we can say, okay, there will be around about 21 million units. That's it. We don't know how much gold or diamonds or copper is in the earth, so or on the different stars around us. So, but with Bitcoin, we have a digital asset, and it's decentralized, and it's not from the central bankers, a planned economy, and so on. It's not in the hand of Mr. Powell or Christine Lagarde or whoever, yeah. And they try to play their game and try to keep the privilege of printing money, and actually, I think it's like slavery, yeah, because we're all slaves of the fiat currency, and they steal us all the money. It's another tax, yeah, inflation and everything. So the purchasing power goes away, and that's why I wanted to talk to you as well, because you're perfect in explaining this important matter for the future. Because we are at the end of this credit cycle and of this monetary system, and I think the next couple of years will be just insane. It's insane. Luke Roman has on the show as well. And I know he's a dear friend of yours, and he introduced us each other. So thanks, Luke, for introducing us. And he has a different plan. He thinks we will get back to a gold standard. So what's your point on this?
Yeah, I think Luke and I disagree on this idea a little bit. My big concern with gold isn't necessarily how it performs on an individual level. I think when you look at it, if I go out and I buy some gold, I suspect that it's going to continue to protect my buying power anytime into the future for the most part. Bitcoin could potentially eat away at that moving forward, but let's just assume that that's not true. Gold's going to perform spectacularly as far as a defense mechanism in order to hold my value, right? When you take gold and you put it at a sovereign level, and a country is now using it as a foundational layer for a currency that they're going to wrap on top of it as a second layer, it fails every single time throughout history. It's never performed that function ever.
Okay.
And our proof in this is that there's no gold standard today anywhere, and there's never been one that's lasted for more than a couple decades. So. And the reason why that happens is because for gold to be used at the sovereign level, it requires a critical element. And the critical element is a human in the loop. And so anytime you have a human in the loop, there's going to be a method to debase it. And one of the biggest shortfalls of gold at a sovereign level is the divisibility on it is terrible for conducting transactions. So you're forced into a currency that has to be built on top of it when you get to a sovereign level, no matter what. And because of that, you're always going to have elected officials, appropriators, whoever, policymakers, right, that are going to use that to their advantage, to pay for a war, to debase it in some type of way so that they can raise taxes, because it's a form of tax anytime they debase it. And so what I always like to point people towards is, so we had Bretton Woods in 1944. Everyone knows we came off of Bretton Woods in 1971. And the question I'll ask them is why? And the reason why is because we debased the amount of gold that was sitting there in Treasury in the United States, that if we started getting called, if the currency started coming through the door and the gold was called, they would have quickly run out of it. So there was a point where they had pulled the trigger too many times on debasing the money multiplier in effect. They did it too many times, and as a result, we had to come off the gold standard. So my question for somebody who's saying we're going to go back on a gold standard is, well, how in the world do you think that this is going to be any different? Right? More importantly, when we went on to Bretton Woods back in 1944, you had fiscal decision makers that had a habit of being fiscally responsible relative to where we are today. Right? When you look at how fiscally responsible we are today, globally, I don't care which country you go to, completely irresponsible. So to think that we're going to be able to magically go back on a gold standard collectively, either through an SDR peg to gold or whatever you want to come up with, my opinion is we'll be forced to come off of this gold standard or this new money instantaneously, because the fiscal spending is so out of control, and the public's desire for further fiscal spending is that we need even more. Right? I mean, a perfect example is this bill that's just going through the U.S. Congress right now. It was for $600 per person and a bunch of money going to foreign countries. And then the president stepped in and said it needs to be $2,000, not $600, right? So let's put a couple more trillion on it. And the desire and the appetite among the populace is not only yes, but hell yes. Right? Like, yes, we want even more. Why stop at 2,000, make it 4,000? So my point in saying all that is to just demonstrate how fiscally irresponsible everyone is, and to think that if you're going to hold yourself accountable to a monetary standard by putting yourself on a gold standard without the fiscal spending habits adjusting themselves to become responsible, you're totally kidding yourself. You're going to come off your gold standard in 10 days.
Okay, that's interesting. Yeah, I think I have to invite Luke one day, and then we three talk about that. It will be really interesting, I guess.
He's coming around to my line of thinking, I promise you.
We will see, Preston, we will see. So what do you think? How will be the transformation happen between our actual fiat currency system and to a Bitcoin standard? How should this play out? So,
well, how it should play out is gradual, and it should be something. But how it will play out, you know, I would like to be an optimist and say that it's going to be this stable thing that's going to not be so painful for everybody. But I kind of suspect it's not going to be that. I kind of suspect that, like we saw in 1923 Germany, is when you really saw the paper mark just explode parabolic, right? Everything up to that was very difficult to manage, but once you got into the second half of 1923, it became completely unmanageable. And so I would use that as an example in history that says that when a currency fails, ultimately what's happening is trust is lost. People are saying, you know what, I don't trust this thing that I'm holding to protect my ability to buy what I was able to buy yesterday. And history has suggested that trust erodes at the snap of a finger. When it's gone, it's gone. And so I think that could play out as early as late 2021. And I think the latest it could probably play out is 2025, the late 2025, somewhere in that time range is what I would suspect that we're going to see that happen. Okay.
In my last book, the book is called The Biggest Crash of All Times. I predicted 2023. So I hope, I'm not hoping that
it sounds like we agree.
Yeah, exactly. I see just no other solution. Do you see any other solution the politicians or the central bankers have to keep this thing alive, to keep it spinning? Or they will print more money, of course, but where is the end? Where's the mathematical end?
Well, I think policymakers actually need Bitcoin, and they might not realize it yet, but I think in time they will realize that it's kind of the thing that's going to save them. And a lot of people are saying that all the printing and the UBI and all that kind of stuff, they look at it negatively. I would tell you that it's actually needed. It's needed in order to transition and bridge the gap into this new fiscal standard. And I would equate it to like an engine that has a hole in it and there's oil leaking out of it. If you want to keep that engine running, you got to keep putting oil in that engine. You're just going to have to do it aggressively. And I would kind of describe that's what we're experiencing on a global scale right now. Is there's a massive hole in the engine, in the fiat engine, and it's just all flowing into Bitcoin, and it's happened pretty slowly as far as our market cap goes. But I think here in 2021, you're going to see. I mean, my opinion is you're going to see Bitcoin go to 200,000 to 300,000 in 2021, and it might even go further than that. And then there's a potential it could cool off for a little bit, and then by 2025, it's gonna take it's basically gonna become money at that point, in my opinion. So
it's very interesting. I made the same prediction in the book. I said we will see new all-time highs pretty soon, and I said we will see $1 million at the end of the next decade. So this transformation to a Bitcoin standard. What do you will we see total chaos in the society, in the political area? So, because I have a very dark vision actually for the future, like civil unrest, perhaps even civil war. Because if you look back in history, these things, a new monetary system goes along with unraveling, with crisis, with crash, with war sometimes.
I think in the long run, it's going to be very beneficial to humanity as far as global coordination and cooperation.
Yeah,
getting there is up in the air, and it could be a very dark future in the short term. And it could actually transition maybe better than we realize. I guess I'm just open to both vantage points.
Sure. Yeah.
I think that there's going to be a lot of hardship for a lot of people.
Mm-hmm.
And most of that's going to come down to just the transition. At the end of the day, through all this inflationary monetary policy, what we've really done is we've just pulled the future into today.
Exactly.
Right?
Yeah.
That's what we've done. And if you don't think that there's going to be some type of consequence for pulling that much future into today, I think you're sorely mistaken. So there's going to be bill payers for that. Who they are, I mean, I'll tell you who the biggest bill payer is. It's people that are holding debt and holding bonds. They're basically going to be completely impaired. They're going to allow for this big reset to occur. There's going to be probably the biggest, and I don't say this lightly, the biggest transfer of wealth the world has ever seen play out in the next 5 years. And, you know, I've had people tell me, well, there's only a few people that hold a ton of the Bitcoin. And so how is it going to be any better if these few people hold all the wealth versus what we have right now with fiat? And what I would tell them is, a person like me who has a bunch of Bitcoin, when the stock market gets repriced in Bitcoin terms, because today I can't buy anything, right? Because it's this fiat bid that is taking prices into insanity. But if we move into a Bitcoin standard, like I suspect is going to happen, that's all going to get repriced in Bitcoin terms. And then I would imagine you're going to see the exact opposite play out, where equities are being offered at such ridiculously cheap prices in Bitcoin terms that people like me are going to step in and do discount cash flow models on it and say, hey, this is a buy. I'd rather have this equity than this Bitcoin. And so you're going to see a lot of those Bitcoins get redistributed throughout the world just through the prices that are offered through the sale of equity, real estate. I mean, you name it, any type of asset that's out there with excluding debt is going to be repriced in Bitcoin terms, and all the Bitcoiners are going to buy that equity, and it's going to all get, redistributed throughout the world. So I don't necessarily buy into that narrative that we're going to be in a similar situation. I think it's actually going to distribute it just through the price depreciation that's going to naturally occur through this event. Because that's what's ultimately happening with Bitcoin is all this price deflation that's been pent up and basically manipulated and almost like a dam. It's holding back all this price deflation.
Yeah.
Bitcoin's basically going to be a wrecking ball to the dam that's holding that up, and you're going to have massive price deflation that's going to take place in fiat terms, and in Bitcoin terms, you're gonna be able to buy those kind of things up for a very, very low price, and that's how it's all going to get redistributed throughout the world.
Yeah. Yeah, you're absolutely right. I guess the majority, the most people in the world who own a life insurance or something else, bonds and everything, they will pay the price. But this is also a lecture of history. If you look back in history, when a government fails or when the currency fails, it's always the people who pay the debt. It's always the people who lose their wealth. And I used to live in Argentina during 2001 when the peso went bust, and I just saw how fast it happened. That's why I dived into the whole monetary system. That's why I was so interested into how to invest my money. Because when I went back to Germany and I sold all my stocks and I bought gold back then, because I saw how gold exploded in Argentina in one day, and I saw within hours, the peso was not accepted anywhere. People said, hey, we don't trust them anymore, and trust is a very, very important currency, actually, the most important one. So, and this trust, it gets violated for years now from the central bankers, from the politicians, because they pump more money into the system. They create more debts, more than ever before. And I just had this gift actually to see how it happened in Argentina. And it was within hours. I woke up at 8 o'clock, everything was fine. At 10 o'clock, the banks were closed. People were standing in queues trying to get the money out of the system to buy anything. And back then, after 2 hours, you had 50% off the peso. And then at 12 o'clock, 4 hours later, nobody accepted. It didn't matter how much peso you had on the account, on your bank account or in your pockets. The people just said, hey, and look at Venezuela. It's the same thing which happened, And friends of mine who still live in Argentina, they love Bitcoin. They ask me, hey, how can I buy Bitcoin? I need a store of value. The same in Venezuela, the same in Turkey, everywhere. The people wake up. So, but let's step back one step and ask a very important question, because most people are not familiar with Bitcoin. It's like, it's very complex, and they always have a negative news articles about it. For example, money laundering and Mt. Gox and hacking and I don't know, anything bad is always Bitcoin, So what is Bitcoin for you, Preston?
First of all, I can empathize with all the people that have those opinions, because it's really a complex topic to dig into. I would argue, you almost have to have an engineering mindset to be able to plow into the nuances of how it functions. If I'm trying to explain it to somebody who just has never heard of it or is really skeptical of it, I try to explain it like this. The digital scarcity piece of it is enabled through blockchain. And the best example I can give somebody is, if I sent you a picture, you can copy and paste that picture. You can send it to 1 million people. But if I sent you the picture through a blockchain, you would be the only person that would possess that picture. So like, as I send it to you, I no longer can possess it. Yes. Once you receive it, you're the only person that can have it. So you could create basically a digital Mona Lisa. And if the whole world thought it was a Mona Lisa, then it can't be replicated. You can't digitally create another one. As crazy as that sounds. But that's what the encryption set up in a blockchain enables with our internet connection these days. And so when you think about that, it's a really powerful thing, because if you just create 21 million units, there can only be 21 million units. And if everyone agrees that that's the best protocol that's been created, well, then everyone moves to that standard. Now, the thing, another big complaint or argument or concern that I hear from people is they'll say, well, there's 1 million of these things. There's 1 million of these cryptocurrencies. How do you say Bitcoin's the winner? And I would emphasize it as this. Bitcoin is completely decentralized. There's no one person or a country or anybody that can shut it down. And most of that is enabled by full nodes. So if you got $100, you can buy a small piece of hardware, you can plug it in. And what that full node is effectively corporate governance. So if you've got an investor crowd that's listening to this, they understand corporate governance, they understand voting rights associated with common stock. I would tell you the full node operators within Bitcoin are the voters that get to decide what's best for Bitcoin. And if you think that those full node operators don't own Bitcoin, you're kidding yourself. And if you think that those full node operators want to debase their owners, their cut or the units that they own of Bitcoin, you're really kidding yourself. So there's an incentive structure that's set up through this full node operator, through the full node networks, the network of full node operators that has a game theory and an incentive structure that it's never going to be debased. When you start looking at a lot of the other cryptocurrencies, they were individuals who tried to make something that was better. In order to raise money, they created, let's just say they created 100 units. Well, of those 100 units, they kept 50 of the units for themselves, and they keep selling it into fiat to raise money and generate. And it's centralized. They don't have the decentralization that Bitcoin has. Additionally, Bitcoin has one of the things that makes it so secure is that anybody can run a full node into perpetuity. So when you start talking about things like Ethereum, it has an enormous amount of data to run a full node. And if you think that that data is getting smaller by the day, you're wrong, because it's aggressively growing larger and larger. So in 5 or 10 years from now, the amount of hardware you're going to have to own in order to run a full node on Ethereum is drastically different than Bitcoin. So what that does is that creates a consolidation of power amongst the people that own the corporate governance of the protocol. And so I think when I look at Bitcoin and I say this is the best cryptocurrency in existence, it's going to continue to be that way, most of that opinion goes to the security of keeping it decentralized 10, 20, 50 years from now, because anyone and everyone can run a full node and they always will be able to. So I think some of those are the really important ideas around it. If anybody has any type of interest in this stuff, I'd tell you, go read 5 books and then you'll realize you probably need to read another 10 or 20 more.
Yeah, true story. Yeah, that's why I try to write one book next year about Bitcoin that everybody can understand it, how to buy it, how to store it, what is important to know. So yeah, for everybody, for the neighbor and for the old grandma and for the student at the university. It's very important. We are just at the beginning of a total new era, I would say. So you talked to Michael Saylor on your podcast, and Michael was on this show as well, and he will also be part of this series. And he is very famous now for the first NASDAQ listed company, MicroStrategy, which he founded and he's the CEO of, to invest cash in Bitcoin instead of buying back own shares or invest in bonds or something else. So what is your take on Michael Saylor's strategy and on MicroStrategy that he bought Bitcoin for the company?
So I have a small business. I'm obviously a private business. I did the exact same thing that Michael did, and I did it at the start of 2020. So for me,
Wow.
when I look at what Michael's doing, it makes complete sense to me.
Yeah.
I think the thing that makes Michael so special is anybody in the public market as a CEO or founder typically doesn't have a controlling share of the voting rights of their business to be able to do what Michael did. And so I was kind of suspecting we were going to start seeing businesses put Bitcoin on their balance sheet as, like a marketable security, like you would a marketable security. But I was expecting them to do it in a much smaller allocation, call it 5% or something like that.
Yeah.
And if that would have been true, and that would have been the first example, I think a lot of the power of what it is that he did would have been lost in the noise, and you wouldn't have seen it reflected in the market price like you've seen it in MicroStrategy. Because Michael does have a controlling voting share of his business, he was able to step in and do something in such a demonstrative way that it's a little hard to unsee in the public markets. And now that he's doing it in the debt market as well, I think that's even more. Yeah, I think the note that he just recently issued is actually more demonstrative than to the power of Bitcoin than him just buying it with his own retained cash, because it's almost like a double whammy effect, because he's able to tap into the debt market, which when you look at that pool of money, most of that money can't access Bitcoin in any type of way.
Exactly. Yeah.
And now that he openly said, and I think the oversubscription, I think it was oversubscribed by 150 million, speaks volume. And it was only at 75 basis points. His coupon was at 75 basis points. So the fact that it was that oversubscribed tells me that people in the debt market want access to Bitcoin in a desperate way.
Yeah.
I was joking with Michael during our interview that maybe he should have issued his coupon at 0%, and maybe it would have still been oversubscribed.
Yeah.
Because they're obviously interested in the convertibility of the note. So I think what we're really going to see is a lot of companies, because especially some of these tech companies have extremely strong balance sheets. You look at Apple or Amazon or whatever, their balance sheets are so strong. So why not issue some 5-year notes that are convertible at literally couponless? And you tell them you're buying Bitcoin and there's some type of convertibility. I mean, the fact that it's so oversubscribed, you can drop the coupon down.
You can raise the strike price of the convertibility sky high, and I think that the debt market is going to buy the living heck out of it. And for the companies, I see it as very low risk, especially the ones that have a strong balance sheet. So it's going to be something that in 2021 is the thing that very few are expecting right now. But at the end of the year, everyone's going to be looking at it like, this was so obvious. How did we not see this?
Yeah, a no-brainer. It's actually a no-brainer. Yeah. And I think Michael started a total new trend, because he was the first one who went vocal about that. And I definitely agree with you. I think other companies will step in as well and say, hey, before we leave it on the account or buy back our own totally overpriced, overvalued shares, I buy some Bitcoin. And he's already on Elon Musk. Yeah, we both know it. On Twitter, he tries to get him into Bitcoin. Perhaps it will work out. We will see. But we saw also after August, after MicroStrategy said, hey, we bought Bitcoin for, I think the first was 175 million or something. We saw Wall Street entering the market as well. We saw Stanley Druckenmiller, who was positive about Bitcoin. Paul Tudor Jones, who said, hey, inflation is coming and you need a fastest horse in the stable to win this race. And we saw Guggenheim, and we saw all the banks coming out with price targets, JP Morgan, Citibank, 140,000, 380,000, and so on. And now we saw 400,000 from Guggenheim. And then we of course, plan B, with the stock to flow model. Actually, the stock to flow model, I published it in the last book with Plan B together. So it was the first time it was published in a book on paper. I'm really glad about that. And it was big in Germany. Everybody was like, what? Because back then it was the stock to flow model. He said like it's around $200,000 will be the price target in the next bull run after the halving. And now he updated the whole model, and now he goes to much more. We talk about millions now as a price target. So what do you think? Which company will follow him first? I know it's speculative. Yeah, it's.
You got it.
Yeah. Do you speak German, by the way?
No.
You have any connection to Germany? Have you ever been to Germany?
No.
No, it's time, Preston. You have to come. I invite you. I invite you for a barbecue.
I want to come for the beer.
Yeah. I'm straight edge, but hey, I will buy you some. So I'm not into beer or drugs or anything, and I'm a vegetarian, but this is something else. But hey, you have to come. Afterwards, I send you my mobile number and my data, and then we stay in contact, of course. But let's go back to the topic. So what do you think? Which company will follow first?
Well, I don't have any type of crystal ball to be able to call that. But for me, the ones that make the most sense are the really big tech companies here in the U.S. Sure. The Googles, the Facebooks, the Apples, the Amazons.
Okay.
In fact, I'd be very surprised after they close out their fourth quarter filing that one of them doesn't. I'd be surprised if one of them hadn't already put some on their balance sheet.
Okay.
And I would be shocked if you didn't see them all have it on their balance sheet by the end of the fourth quarter of 21.
Yeah, I agree. What do you think? Which country will be the first one who steps out and says, hey, we bought some Bitcoin as a protection of our purchasing power? What do you think? Which country could that be?
Well, I have a theory that the countries that have been impacted the most by dollar dominance over the last 80 years are the ones that are going to be the first to adopt Bitcoin in a major way. So, which ones I don't necessarily know, which ones will come before others. So much of it really kind of comes down to the critical thinking skills of the key leaders within that nation, and the critical thinking skills of the people in the treasury and the central banks for that specific country. So you could have a country that just doesn't seem like they would get it quickly. But if they have some great leader in one of those roles, then maybe they might start putting it on their, they might start stacking it faster than others.
Yeah. And what's your bear case for Bitcoin? What could happen? The worst thing could happen to Bitcoin, and then it's over.
So my biggest concern, like my my trigger that there's issues is really kind of watching the hashing rate. So, to date, the hashing rate for Bitcoin just keeps going up. Some of this has to do with Moore's law, so the processors are getting faster. That's obviously a factor, but not at the rate that we're seeing it playing out.
Yeah.
There are more and more miners that keep coming online, and what that tells me is there's money to be made. There's people that want to own this. The work that they're performing is work that's valued in the marketplace. If you would see, and I think the best way to make this more real is, let's look at it from a gold mining standpoint. If you saw the number of gold miners just going up and up and up and up for a decade straight, and it was actually becoming accelerative, they're mining that gold for a reason, and it's because it's very valuable. If you saw the number of gold miners fluctuating all over the place, you'd say, well, maybe the gold is valuable, but it's not necessarily something that's, emerging on the global economy is the next big thing. So, and I also believe that for the stock to flow model to continue to be valid, I think it's dependent on the miners to continue to grow. So one of the reasons Plan B has had issues conducting a stock to flow model on something like Litecoin, in my opinion, is because there's no stability in the mining process, and the demand there is not constantly going up. With Bitcoin, you have that taking place. The demand is constantly going up. You do see more and more miners coming on, and I think that that's the market's way of saying this is the most valuable protocol. So if I saw that start to reverse or to change, then I think there might be troubles on the horizon.
Yeah, definitely. So you're not scared about that some nation will ban Bitcoin or the trading with Bitcoin or something like that, or 51% attack or something like that, because all the miners are in China and we all know it's a dictatorship.
What was your first question? That I heard the 51% attack. What was the other one that you asked?
The first question was that the nations will ban the trading, the stock exchange, everything.
So in reference to that one, my opinion is that the Bitcoin price is actually being driven by the floor. Let me rephrase this. The floor of the Bitcoin price is actually being driven by the miners.
Yeah.
When you pull up a price chart, especially if you look at it in log terms, what you'll find is that the price floor has this perfect Metcalfe's law shape to it. The top of the price chart seems to be unbound, like it's not being governed by anything. So I've always asked myself, what's driving the governor on the bottom of the price that keeps it so perfectly intact? Because I've never seen a price chart like that ever in my entire life. And the only thing I can come to the conclusion on is that the miners are actually setting that price floor. So if the price drops below that, they stop mining. They actually just step into the market and start buying the underlying Bitcoins. And if the price goes above a certain point, then they're going to turn the rigs back on and they're going to continue mining, because that's a more profitable way to capture Bitcoins. And, as you go through these 4-year halving events, I think that the supply suffocation that occurs through those events, some people call it quantitative tightening, causes the price to kind of blow out in an emotional kind of way. And then it comes kind of back down into a price floor that's being set by the miners. So if a nation bans it, this is where I'm going with this. So if a nation bans it, I think it's going to be completely temporary in nature. I don't think it's going to have any type of long-term impact to the price. And I think Bitcoin is just going to keep doing what it does, is mostly because the miners are going to ensure that the price floor is sustained. And this is all dependent back on what I was talking about before, which is that the hashing power just keeps going up. In reference to your second one about the 51% attack, so I'm just not very concerned about a 51% attack, mostly because of the power of a full node operator. So let's just say that we have a bad actor that steps in and takes their 51% hashing power, and instead of making money by mining Bitcoin, they instead want to attack one of the blocks and reverse one of the transactions. And let's just say they're trying to do this to just create fear or reduce the trust in the protocol. They're only going to be able to do it for that block, and then they're going to have to continue to outpace the remaining blocks in order for this to have an impact. What I suspect would happen is that you would have a lot of the full node operators do something to undo the bad actor by going back to that specific block. Now, this would obviously cause some trust concerns with the protocol in the short term. Whether the full node operators could do such a thing, working in harmony with each other, I kind of suspect that they would be able to do that because they would all be incentivized to act that way.
Yeah.
So I think that the full node operators could actually potentially go back and undo the bad actor and remove them in some kind of way. Now, if they could, let's just say that like China is the scenario that I hear a lot of people say. And to date, I would argue that China has demonstrated the exact opposite, which is that they actually value Bitcoin and they're trying to mine as much of it as possible. So for them to change that all of a sudden just doesn't seem like something that would happen to me. But if some state actor would try to do that, I just don't suspect that they're going to be able to hold up against all the full node operators that would kind of come out to try to adjust the protocol and adapt to that scenario.
Okay.
But I'm not I'm probably not the most technically inclined person to be able to argue that. So I would challenge people that are listening to this to reach out to a person like Adam Back or somebody who is extremely technical that understands the nuances of how something like that would happen and hear what their point of view might be.
Yeah. Yeah, I will do a special next year about Bitcoin because I think the bull run will be a total on the run in 2021. And I invite you, of course, as well. And Adam Beck will be on the show as well. And we will invite Plan B and everybody. So it will be just an awesome series. So now let's get back to money. Let's get back to how do you invest during the pandemic? And I always ask the guests the same question. So how do you invest your money? Do you invest in stocks, for example?
Well, prior to this year, yes.
Okay.
I'm pretty boring right now because when I'm looking at how manipulated the markets are, it's a little hard for me to own anything other than Bitcoin. And I know that's a very extreme view, and I think most people just wouldn't agree with that. And that's
May
fine.
I ask, Preston, may I ask how much of your net worth you've got in percentage in Bitcoin? Is it 50%, 30%,
Well,
80%, everything?
I would put it this way. So it's hard for me to answer because I don't know what the market capitalization of my private company would be.
Okay.
But similar to like what Michael did, whatever retained liquid money I have, it's in Bitcoin.
Okay.
So it's a very similar situation as to what he has done. With that said, I think, you know, if you forced me to pick some equities, I would tell you I like Square. I like companies that are going to benefit from this big transition. So PayPal, Square, those types of businesses.
What about mining stocks? Mining stocks like gold miners?
Not so much because yeah, and I thought you were talking crypto mining. I think it's extremely competitive. I don't have much of an interest in that space as far as gold miners. I think they're going to do fine. I think, you know, I'm using, like Michael Saylor, I'm using Bitcoin as my unit of account for measuring the performance of things. So it's extremely difficult for me to look at something like gold and say, hey, I want to own that when I expect it to go down. It's just going to go down by so much in Bitcoin terms. So it's really hard for me to own it.
But the same, if you measure, for example, the Dow Jones or the S&P in gold, and especially in Bitcoin, actually you see the stock markets go down. You didn't earn any money in the last decades.
That's why I don't own any of it.
Okay. Fair enough. Good point. Okay. I don't think the next question I don't have to ask you, but what do you think about bonds? Okay, we skip this one.
No, so let me pull on this thread a little bit more. So
please.
I'm a hardcore value investor, and I know it probably sounds anything but that right now, right?
Exactly.
But here's the thing that I'll tell you about value investing is it's based on an assumption that no one ever talks about. And the assumption that no one ever talks about is when you're doing value investing, you assume that you're dealing with sound money or a sound currency, or one that's not being drastically debased, right? Because how can you perform any type of calculation if the units that you're using to measure things look like Alice in Wonderland and they're morphing and changing in a drastic way?
Yeah.
You can't perform economic calculation. And so, and this was a really crazy point for me. And I know I keep talking about Bitcoin, but I went back and I looked at Apple, and I looked at the top line revenue of Apple. And I mean, it was just going up like a freight train, right?
Yeah.
And then you look at the net income, and it's just going up like crazy. I went back and I redenominated their top line and their bottom line, but I did it in Bitcoin based on the price that Bitcoin traded for that year when they closed out their 10K. And what I found, because I like to graph revenues, I like to graph net income to kind of see the trend and to see if it's starting to become impaired and whatnot. And when I did this and I redenominated the 10Ks for the last 10 years in Bitcoin, what I found is that the top line of Apple had been going down for 10 years. And the first time I looked at it, I was like, hold on, this can't be right.
It is.
Right? And the free cash flows for Apple are going down for 10 years straight. And we all know what they're doing in fiat nominal terms, right? And I remember that was kind of the aha moment for me where I told myself, hold on a second, I don't think I should be buying stocks or be doing value investing anymore, because the unit that I'm using to conduct these calculations is so warped and so mutilated that it doesn't work.
Yeah.
And it was kind of an aha moment for me. And I know for most people listening to this, they're thinking this guy is off his rocker, but I guess we'll check back in 5 years and see how off my rocker I was.
Yeah, just look at the last 10 years. Bitcoin went up 6 million%. It's crazy. It was the best performing asset in history, and I think the next decade will be the same, because we will see people will lose trust in the monetary system. They will lose trust in bonds, in institutions, in the dollar, in the euro, and it all will go bust. And then they will look for a safe haven. And I think gold will definitely be a part of it, but most people will go into Bitcoin, and Bitcoin will just rally, and it will be epic, I guess. Yeah. So what do you think about real estate?
It really, I mean, this one's always the classic answer to real estate. Oh, it's very local, right?
Yeah.
When you look at how much inflationary monetary policy has played out and what the effects of it have been, it's that if you're in the center of a city, particularly a city that has government bureaucrats, or is a financial hub, the scarcity of the land has been just an astounding return for somebody that's been able to own it. The problem, I think, for a lot of people is the prices are bid so high that it's almost impossible to get access to it. And even if you can get access to it through a decentralized instrument like an ETF or something like that, the premiums that are put on it, because it's been sliced into a bunch of shares, makes it to the point where that trade is I don't necessarily see that trade continuing. I think that you might be at kind of the peak of that trade right now. The land that's scarce is going to continue to hold its value. And I think that that's the thing people need to be really asking themselves right now moving forward. It's not necessarily how can I make out like a bandit or like really increase my buying power. I think the big question people need to ask themselves right now is how can I protect my buying power? Yeah. So although my Bitcoin, especially for an older audience, I know from like my parents, they don't need to knock this thing out of the ballpark, right? They just need to make sure they don't get it wrong.
Yeah.
And so if you're looking at it from a portfolio allocation standpoint or a position size standpoint, I think real estate might be a really wise place to be, just to protect your buying power, especially if it's in a place that is an area that has population growth and has some type of scarcity to the land that's associated with it. I think those are the two big key elements when you're thinking about real estate, and then trying to own something that's going to preserve your buying power moving forward.
Okay. Yeah. What do you think about physical gold and silver?
People aren't going to like my opinion on that. I think that when you look at the value of gold today, I don't know what percent would be based on people valuing it for its monetary properties. So the value on gold, the generic value on gold is $10 trillion. You know, if I was going to really generically say half of that value is based on monetary properties, people owning it because they look at it as a store of value or money, I would suspect that the number is way bigger than 50%. And so you have to ask yourself, if everything that I've been saying is true up to this point about Bitcoin, and that's valid, I mean, I hate to tell you, it's going to eat into that amount that people are willing to own it for its monetary properties. So then the question becomes how much, and I don't know. But regardless, whatever it is, if you think that any of that value is going to be taken by Bitcoin, then your buying power is going to be, it's going to be retained, but it might go down a little bit. And so for that reason, I don't want to own it. As far as mining stock, I would much rather own a mining company than to own underlying gold, because they are kicking off some type of free cash flows there that are going to help augment the value premium for that. But I mean, when I look at gold's value over the last 10 years, the last 4 years compared to Bitcoin, it has not performed very well. It's actually performed pretty poorly.
Yeah, I think when inflation kicks in, and I think this will happen the next couple of months and years, then I think some mining stocks can even outperform Bitcoin, because they will just go parabolic. But we will see. We will see. So I'm a big fan of diversification. You know, you have different eggs in your nest, so you can participate on this run or on this bull run. And so I wouldn't just invest in one asset, because it's too dangerous. You know, even I'm a big Bitcoin maximalist. You know, I believe in Bitcoin. It's not only to get rich or something. I like the philosophy. I think it's a big chance for humanity. So to get into a golden age in a more democratic, with a more democratic monetary system, you know, to distribute wealth more widen. Now, not only the central bankers and Cantillon effect, you know, I guess you know what it means. So some people at the high end will participate and have a profit. So everybody can actually buy into Bitcoin in a very early stage, and we are really, really early right now. That's my opinion.
So I really like your point, because somebody who'd be hearing my talking points and hear that, you know, my one position for the liquidity that I have is in Bitcoin, they might say, well, that's completely irresponsible, because you got to have some type of diversification to your portfolio. For a person that's thinking that, what I would tell you is my free cash flows that I make on a monthly basis have nothing to do with Bitcoin whatsoever. Bitcoin could go to zero, and I'm still pumping out free cash flows that will support my lifestyle for the rest of my life, right? Like, I have nothing to worry about. If Bitcoin would go to zero, trust me, I'm in good shape. I don't have to worry about myself, right? So that's a unique situation that not everybody's in can make that bold play. I would argue Michael Saylor's in the exact same situation.
Yes.
Michael Saylor can take such a bold position. Bitcoin could go to zero tomorrow, and guess what? His company's still making $30-40 million a year, and he's profitable, and the assets of his business are not impaired whatsoever. So I think what you have is, you know, Warren Buffett would say, I'm a great investor because I'm a businessman, and I'm a great businessman because I'm an investor.
Yeah.
what I would tell you is you get a lot of people in the finance space that are managing other people's money that are always thinking portfolio allocation, where you have to have diversification because it's other people's money. You can't have one position because that's a lot of risk, right? Where I think business owners can kind of look at things a little bit differently because they do have diversification in the assets that are sitting on their balance sheet. They're just not assets like marketable securities that everyone's accustomed to seeing when you're running a hedge fund. So there's a big difference there for people to really kind of understand where I'm coming from when I say that I own Bitcoin, right?
Do you buy at these levels as well?
Oh yeah, I mean this level here is, I think it's at like 23,000 right now. This is not intimidating me in the least bit.
Okay, good. A steady hand. So, and will you keep up buying when the price goes to 500,000 or 1 million, or when do you leave the market? What's your exit strategy?
Well, I think anything past 100,000 on this next run is going to be a little interesting. Whether you keep buying after that point.
Okay.
You know, I think the if it goes past 500,000 on this cycle we're in right now, I kind of suspect it's just going to keep on going. And so do you buy? Of course, I guess you just keep buying. If it goes up to 300,000, kind of sputters around a little bit, starts coming down a little bit, we might be coming back to stay at around the 100,000 range for another couple years before it goes on its next tear. I just don't suspect that's going to, my base case is that it's going to keep running on this next cycle. The reason why is because I think so many people understand the stock to flow model right now. They're starting to understand how the protocol is effectively a Trojan horse to fiat currency. And think about it. Even if you bought at 200,000, it went down to 100,000 for the next 2 years and then started to go back up and made a run at 1 million. If you did a discount cash flow analysis of buying it at 200,000 and waiting 3 years for it to go to 1 million, good luck finding anything that can outperform that return. And so that's kind of the reason why I think maybe it might not stop on this next run, and then it might just keep on going.
So to summarize, so your price target for 2021 is 100,000 or more?
Yeah, I think a really conservative estimate that I have no hesitation getting behind would be $100,000.
Okay. And what do you think when it goes to 300,000 or 500,000? It will be we will see a blow off or something, melt up. Would you take some chips off the table and say, okay, come on, I just buy, I sell half of it and get back later when after correction? No, okay.
No, I'm in a unique situation where I don't think I'm gonna have to. So I'm just gonna sit through it, and if the price goes to 300, goes down to 100, and stays there for a couple years, I have enough confidence in the protocol and the direction that it's all going that in the long run that I'm not too concerned about it.
Okay.
I think if it goes through 300,000 and goes through 500,000, you might want to hang on to your hat because we might be stepping into a melt up scenario.
Yeah. That's what I see too. And what do you think when we will reach 1 million? Till 2025, you said earlier.
Well, I think the conservative estimate is by the end of 2025.
Okay.
I could say that with quite a bit of confidence.
Okay.
It could happen sooner though.
Yeah. I don't have to ask you, but I just wrote it down. Altcoins. Do you invest in any other coins except Bitcoin?
No.
I heard Ripple is pretty good.
Yeah, they've got some serious issues there.
Yeah, right now. But I know that now there will be a shitstorm in the comments. I know that. Okay. And last question about Bitcoin. Any tips for the investors how to store the Bitcoins? What's your recommendation?
This really depends on the person and their technical skills.
I know.
Yeah. So let's say you're buying Bitcoin for grandma. I mean, the last thing you want to do is have grandma set up a hardware wallet.
Yeah, that's right. That's why I have gray hair. You see that? I did it 6 hours.
Because grandma's going to be making a donation to the global population of everyone that owns Bitcoin.
Exactly. We have a shortage on Bitcoin, and it's good for the price.
That's right. Grandma's good for the price if you're giving her hardware wallets. So I use that as an example just because you'll find people in the community that say there's only one way to do it. I would push back on that and say that you got to really kind of customize it to the person.
Yeah.
If you have a lot of technical prowess, read up on how to use a hardware wallet. I would strongly encourage people to have a multi-signature solution in place. That's going to be the safest thing that you can do. It's only as safe as your ability to recall how to actually access it. So make sure that you you take that to heart. But yeah, I leave it pretty generic. The other thing that I would encourage people to do is that if you do get a hardware wallet, that having a metal seed is probably another good option to back up. There's a lot of good metal seed storages out there that are tested for high temperature, like a house fire and things like that. I would tell people to do a little bit of research. Jameson Lopp has a great article on analyzing all these different metal seed storages. So I would tell people to dig into that and take it very serious, because unlike what people are traditionally used to, which is I'll call my bank and they'll get me my money back if I make a mistake, there's no do-backs on this one. It's the big boy club.
Exactly. You're responsible. You're responsible for your keys and everything. Yeah. So Preston, is there one book you would recommend our audience which we have to read to prepare for the next couple of years or for the next cycle?
You know, this is, I have this right in front of me, so I might be biased or...
Oh, it's my book. That's nice. Thank you. I give you the money later.
I had this in preparation for our discussion because I kind of suspected we were going to get into some of the hyperinflation with the German Weimer back in.
Okay.
Yeah, the big debt crises. I'm a really big fan of this, and I'll tell you the part that I've really enjoyed about this is in one of the books, he specifically goes into detail of the German debt crisis from 1918 to 1924. And what I like is over on the side, and I'm just holding this up here. Over on the side, he has headlines from newspapers in Germany, based on specific dates. And so what you can see is when you're looking at that price chart before the hyperinflation happened, you can see what people were saying at various points in time. And one of the things that I found so fascinating is when it really started getting aggressive, that in the headline, the thing that kept coming up in the business headlines was, this company is now using this currency as their new unit of account. They're no longer using the paper mark. They're now transitioning to using this. Business owners can't figure out what the value of anything is. Like, you can see how, I guess I'm using it as a template to look into the future that we're living right now, or where the future is about to go, and say, well, if I start seeing a headline like this, maybe this is where we're at in the curve of what's coming next. And I found that to be very useful. So I would tell you Ray Dalio's Big Debt Crises is a fantastic book.
Good choice.
That would prepare you really well for what I suspect is about to happen.
Yeah, true. It's definitely a must read. So my last question, last but not least, what is for you the sense of life? It's totally different. I know it's totally different question about Bitcoin, money, stocks, everything, cycles. So what's the sense of life for Preston?
Well, you know, I found that I get my most pleasure out of helping other people.
You do. Thank you.
It's really just, I think a lot of people will search for the meaning of life or search for their own happiness by buying things or doing things that are self-serving. Like, oh, I want to get this new job. That way I can be promoted, or I get this new title because that makes me feel better. And once they get it, I think what they find is that now they're moving on to the next thing that's going to be self-serving to themselves. And it's this, it's this endless do loop of searching for happiness by pleasing themselves, only to find themselves looking for something bigger and bigger, which is the ultimate rat race. So, you know, I find it really enjoyable to help other people. I find it, I suspect we're here in life to learn about ourselves. Like the teacher is yourself, and everyone around you is the mirror. And all they're doing is they're showing you a reflection of yourself. So when you have pain in your life, it's most likely because you've created that pain somewhere else, to some other person or some other thing that's surrounding
Karma.
you.
It's karma.
That's right.
Yeah.
It's everything in physics is reciprocal.
Exactly.
So for you to think that it's not reciprocal in your own actions and the way that you act on a daily basis with your environment, I think is kind of a fool's errand to believe anything other than that.
I agree. Totally agree. Yeah.
So,
and there's a German saying, you can't take anything with you in the grave. So no gold, no ledger. That's it. The only thing you can perhaps take with you, it's memories and experience, you know, if you believe in reincarnation or something. But I'm a strong believer in karma as well. Do good, and good will happen to you as well. And I have to say, you do an amazing job with your podcast to educate people, and I can strongly recommend your podcast, of course. And how can people follow you on Twitter or somewhere else? Just give us some hint.
So I'm on Twitter, just my first and last name, Preston, last name Pysh, Pysh. That's where I'm most active for sure. I'm really not active anywhere else online other than Twitter. And
it's totally worth following you. It's totally worth following you. It's really great, guys. You have to do that.
Thank you very much, Mark. And thanks for bringing me on the show. It's been really
fun. It was mind-blowing. Seriously, I learned so much, and was such an honor to talk to you, and so much fun. And we have to repeat this, of course. And I think the audience will say the same. And I'm looking to the comments already. I'm looking forward, and I had so much fun. It was awesome. Thanks
for having me, Mark.
Yeah, definitely. You're welcome.